Firstly, the demand outlook for dairy is very positive. A lot of new demand out of Asia, and our competitors can increase their production, but it's at a very high cost. So that leads on to the second benefit. We have a very low cost structure. We can produce milk at 40% cheaper than our competitors. So there's a good opportunity for us to earn very good margins. The third reason is dairy returns are very strong at the moment, forecast to be 7 to 8% per annum. Just looking up a 2-year fixed term deposit rate earlier, 4.8%, so we can generate returns better than that. And finally, dairy's a very good investment in terms of looking after your money despite inflation. So if we expect capital growth of 4 or 5% per annum, not only are you getting a return from your money, but we're preserving the value of your money or even growing it. Opio is a very attractive 139 hectare farm in central Southland on the well-known 100 line. It's been run as a run-off block for dairy farms grazing replacements and wintering cows. And we're going to convert it to be a very good medium-sized dairy farm, build a herringbone cowshed and put in place a best practice effluent management system. We think the farm size at around 400 cows will end up in a very efficient system, very efficient farm that's easy to manage, and if and when the farm is sold, it'll attract a very good book of potential buyers. So once we've gone through the whole process, we'll end up with a very good, newly established dairy farm at a cost of $39,600 a hectare, which is very competitive, and delivering those target returns around the 6, 7, 8% per annum. We don't get very many medium-sized farms like this, so the 400 cow farm is very attractive in terms of being able to find managers that are very capable of running farms of this size. It's a farm where the manager can get to know cows individually and really manage their costs quite closely. So, you know, it's a good medium-sized farm, easy to operate and easy to sell at the end of the partnership. A second factor is we think there's rising land prices around the corner. Farm values have gone up a little bit in the last 12 months, but we're expecting increasing milk prices in the new year with Chinese demand and increasing land prices. And to be honest, we do come up with a number of farm investments over a year, but we don't have any in the pipeline at the moment. So if you do want to beat some potential price rises, now's a chance to get involved in a good farm like Opio and avoid those price increases that could occur. So we're going to take over the farm on the 1st of June, and the first focus will be to get all the farm system up and operating, finish off the development, get the manager and the cows in place. But after 9 months of operation, we should be able to generate 6% return, paid monthly. We expect the farm to perform at better cash returns than that. Returns above the 6% will be paid out according to investor direction. Contact the MyFarm team, either myself, Andrew Waters, or Matt Harrington on the contact details with this email or on our website. We can run you through any questions you have, send a due diligence report we have on the investment, and help you as to how to fill out the application form.